The price of oil, of course, has been very much in focus in recent weeks with Russia's invasion of Ukraine and that massive move higher. We saw West Texas crude trading above $120 a barrel and falling back since then. This also has an effect on individual oil stocks, of course. So I'm wondering, is perhaps the cleverer play there to look at some of these stocks? So in this video, we'll take a look at some of the three of the world's largest oil companies and see where the opportunities might be. Hello, I'm David Jones from Capital.com, and I thought we'd take a look at three stocks that have clearly been affected by the Russian invasion of Ukraine because they're involved in the oil business. So as usual in this video, I'll talk through some of the stocks quite briefly, some of the recent news around them, analyst expectations, then we'll jump onto the platform and take a look at these in a bit more detail and see where the opportunities are. And there are opportunities, I think, because of the volatility. You know, we've seen oil fall back quite sharply over the last 10 days or so. It's knocked some of these stock prices back. So I thought, let's take a look at them and see if there are opportunities here. If you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And every Friday at 2:30 UK time, I do a live stream direct from the YouTube channel. If you're subscribed with the alarm bell thing pushed, you get a notification of YouTube just as we're about to go live. Right, let's jump into it and take a look at the first of these three oil stocks. So first of all, ExxonMobil. So the company was founded back in 1999 by the merger of, yes, you guessed it, Exxon and Mobil. And it's one of the world's largest companies in terms of revenue. Not surprisingly, a good year last year. All of these stocks have done well in the last 15 months or so because of the resurgence of the oil price. So last year, ExxonMobil was up 48%. And this year has not been too shabby either, with the stock price gaining around 25% for the year to date. When it comes to analyst forecasts, it's a really broad range where they think the stock's going to be this year, from as low as $66 to as high as $166. So that's a massive spread. But the broad expectation is for around a 13% gain from where the stock is trading now. Let's take a look at the chart and see where it might go. Let's start things off with ExxonMobil. What's interesting here for me, look at this downtrend that had been in place since 2016. So from around $95 for the stock, this downtrend all the way down to 30 in March 2020. Came back to it again in November last year, then of course, November 2020, sorry. Then of course we had this big recovery up. So I think we do need to be aware that 90 to sort of 95 has been a big historical barrier for Exxon over the last, 5-6 years or so. So let's just bear that in mind. But what I want to look at now is this recovery trend. So here we go, off that low in November, October 2020, down around $32. The trend was up anyway, coming into this year. Clearly, of course, what happened with Ukraine, with the Russian invasion, lifted the price higher. If we take a look at the RSI down here, I don't think we're getting too much from the RSI. It's dipped back towards about 40%. Clearly very overbought as the price really accelerated away in January and into mid-March. I think there's a couple of ways of looking at this. First of all, the trend for ExxonMobil is up and it's really accelerated this year. So one thing, if you wanted to be really patient, is to sit on your hands and see, do we get a pullback towards that trend line around the $64 to $65 area? That's one strategy, I think. So for me, from a trend point of view, I definitely want to be looking for a buying opportunity. The more aggressive strategy here, we've seen the price knocked back from $91 down to $77. The more aggressive strategy would be to be a buyer now. And if I was a buyer now, where am I going to put my stop loss? The absolute closest, the other side of the late Feb low, coming in around $74. To give it a bit more room, probably down here somewhere, the other side of that low in late January. So somewhere the other side of $69, something like that. So the trend for ExxonMobil is clearly up and has been up. It has overextended this year. The only question is, how deep is the pullback going to be, and how long are you willing to wait? But I think there's a couple of interesting levels to watch there with ExxonMobil. And as long as we hold above this trend line and this old low from only December last year, around about 57 to 64 seems major support for ExxonMobil. As long as that holds, then that trend is still very much intact. The next one we're going to look at, it's actually the second largest oil company after Exxon. It's Chevron, and it's an S&P constituent, and it's the 20th largest company in the S&P 500. Again, a quick look at the numbers. Last year, up 39%, lifted, of course, by that oil price recovery. This year as well, a strong performance so far, with the stock up around 35% for the year to date. So up by more than a third for the year, and we're only, 3 months into the year. Analyst range is a bit narrower than we had for Exxon. So the analyst range for the stock for this year is from 169 to 205, but the median expects about only 7% upside from where the price is trading now. So what do the charts say? Do they agree with that fairly conservative outlook? Let's take a look on the platform at the chart of Chevron. So here's our chart of Chevron. I think this is quite a difficult one given the volatility, but you can see from 2018, $135 a share. It's a real barrier for the stock. And then, of course, falls off a cliff into 2020 as the coronavirus pandemic really starts to spread, and we see the oil price collapse. So trades down near 50, the stock, in March 2020. Then we start the recovery. Let's focus in on that. So again, a good trend. Came close to the trend line in September of last year, down around $94. And then, of course, we've seen it start 2022 really strongly, and then really accelerate away off the back of the Russian invasion of Ukraine. So I think it's a tricky one. What do you do here? Do you wait to see if it returns to this 2-year trend line? So do you wait to see, well, do we get a pullback all the way back to maybe the 100-120 zone, which is a big fall from where it is now? It's trading at 158 at the time of recording. So waiting for a 20% plus drop in the price to buy into the trend. I mean, I suppose that's one strategy, a longer term approach. And who knows, if we see more pressure on the oil price, clearly we're going to see pressure on these oil stocks. Or do we look at a more aggressive trend if we pick it up since September of last year? And our trend looks something like that. We've got the lows from Feb in around 130. The stock is still trading, $28 higher than that at the moment. So for me, I would probably be tempted to try and sit on my hands a bit from here and see, do we get a bit of a deeper pullback from here? So for me, the first short-term level to watch for a pullback, if we start nudging back towards 130, do we see that old support come into play again? But, clearly a great performance for the stock this year, but I always find them a bit difficult to find an entry point when we've seen it run away like this. The final one we're going to look at, UK listed company, BP. So it is the 9th largest company in the FTSE 100, the UK index for blue chips. We heard from BP recently that it was going to be abandoning its stake in Rosneft, the Russian oil company, because of the Russian invasion of Ukraine. And this move by BP to walk away from that investment could cost the company up to $25 billion. So we have seen, not surprisingly, the stock price take a hit as the oil prices come off, but also I think as a result of this. Again, a good year. Last year, the share price of BP was up 30%. It hasn't done as well this year as the other two we looked at. It's up around 8% for the year to date. Another wide range of analyst forecasts, but again, fairly bullish, expecting the stock to move up. The median forecast is for about a 30% gain this year. Now, of course, let's not forget, analysts don't have crystal balls, so I think we have to take some of these numbers with a bit of a pinch of salt. But as usual, let's take a look at the charts, look at the technicals, and see what that looks like. So let's take a look at BP. So for me, as a trend follower, This is maybe the most interesting. That doesn't mean, of course, that it's the one that's going to do the best. But I think from a technical perspective, it is really interesting. In March of 2020, it traded down to about £2.25. And then actually took those lows out in October of 2020. So broke the coronavirus low, that big low that we saw for plenty of stock markets in March 2020. But then we started this recovery. So let's zoom in on this recovery. So the recovery has been chugging along, almost a textbook uptrend for this recovery. The RSI moved back near oversold. Didn't quite go oversold, but moved close to it in late February with the stock falling back. That trend is still up. So for me, if we have a look at this trend line here, the expectation now would be for some sort of recovery. If this trend is going to continue, then really the stock should start to rally from here. And the target, my target, would be initially a run back up to these old highs from Feb, just ahead of £4.20. From a support point of view, we've got good support, big support for me in November at £3.10. Shorter term support has emerged this month in March at 340. So 310 to 340, as long as that holds a BP, that trend for me is still up. I'd still be tempted to be a buyer of dips, and only if it falls below there would I change my mind. But it's not performed as well as the US oil stocks here. Interesting to see, does it play catch up this year, or do we see it perhaps run out a bit more steam? But for me, that's a really interesting trend line to watch. That's it for our look at three of the world's largest oil companies. Interesting to see where it goes from here. Lots of volatility recently. Let's see if those trends continue or if we get a bigger pullback. But for now, we'll leave things there. So from me, David Jones and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.